I'm very pleased to now welcome a discussion on the Federal Reserve and how it tackles, well, price stability as well as, well, inequality more and more. Managing partner with Federal Financial Analytics, Karen Petrou, also the author of Engine of Inequality, the Fed and the Future of Wealth in America. I mean, the most perfectly titled book for what we're about to discuss, Karen. I mean, this balancing act that we have seen really front and center for the past year or so, again and again, the Federal Reserve, the chair, Jerome Powell, talking about running this economy hot because they want to finally have a more inclusive job market. Broad-based is really the way they framed it. But then it ran too hot. Inflation got too far, CPI at 7%, and now attention turns to that direction. Can they still square an inclusive job market while taking on the financial price instability we currently see?
No, I wish they could, but they can't unless monetary policy becomes much more balanced and consciously equality focused. And the reason for that, I think, is important. The Fed focuses on maximum employment as well as price stability because it reads its charter very narrowly. But I think it's important to understand that employment is not just about the number of jobs. And there we've fallen very far short. We're still 3 or so million jobs below trend when you take where we were before the pandemic into account. But much more importantly, we're way behind on wages. Inflation is a corrosive force, particularly for lower wage households. And right now, they're down almost 2.5%. Wages are down, even if you have a job.
Yeah.
And the point of a job is wages.
Real wages, negative, because the inflation therein is not rising at the same time as the same pace as your consumer prices are. Meanwhile, let's tackle unemployment first and foremost. You still say we're lagging where we were pre-pandemic. Now, many will argue that perhaps the jobs market's just entirely changed from the pre-pandemic time. But unemployment rate among Black Americans rising in the last jobs numbers, more than 7.1%, up from 6.5%, whereas white unemployment is 3.2%. It's half of that. How can that be squared? How would you want to see Jerome Powell and potentially Lael Brainard, as she's currently running for her job, and the new members of the Federal Reserve tackle inequality in the job market? Do they need to just not tackle inflation so fast?
Yes, and they also need more structurally to not think about monetary policy as the wealth effect. That's really what monetary policy in the United States has been about for now 2 decades. Alan Greenspan coined that term, wealth effect. Certainly, there's also the, quote, Greenspan put underneath financial markets. Now it's the Powell put. And we have the theory is that we'll have top-down growth, but what we have instead is high-flying financial markets and a continuing struggle below the 50% median income or wealth basis. Policy is really based on the view that if rich people get richer, poor people will do better, and that's not the case.
They have been studying racial inequality, particularly in various parts of the Federal Reserve. What do you think it would take? Is it actually that the Federal Reserve monetary policy isn't the policy focus we should have at the moment? It has to be more of a federal focus, has to be more coming from the fiscal side, from what the government does.
Well, this is a really important point. And a lot of the time, whenever the Fed is challenged about inequality, it says, not our fault, it's fiscal. But I have done actually a fair amount of work thinking about this. And I think if fiscal policy were really accommodative on its own, we would have seen that. We've had about $4 trillion of fiscal stimulus over the last year and a half. And yes, things got better, but they're not good. And I really believe, and I've done a lot of work on this, that it's because monetary policy via the wealth effect, and now increasingly by dint of higher inflation, is countervailing fiscal policy. We have 2 forces, really powerful forces, pulling in opposite directions.
So, Karen, give us the policy prescription, if you can, of what the Federal Reserve now needs to tweak, what levers they need to pull to ensure that they can keep focusing on an inclusive jobs market, but also tackle the 7% inflation that is a complete erosion of spending power and of the ways in which people live, particularly in lower income areas.
Well, I hope they can. I am among those who felt that the Fed waited too long. I really do think it needed to step back, early last year, once it said the Fed wanted to have it both ways. The economy was robust, it was growing, maximum employment. And at the same time, it kept the fire hoses on, feeding the economy with far more liquidity in the face of worrisome signs of inflation. So the first thing it really has to do is tackle inflation. Now, moving too fast is going to destabilize markets. See, another problem of Fed policy is that the Fed is the be-all, say-all of markets now. We don't look at productivity. We don't look at profits. We look at the Fed. The Fed is itself in a really bad corner, and it's got to come out of it. That's what I recommend by moving its quantitative easing, going to tightening and doing that faster, and raising rates as quickly and as determinedly as it can. It's a balancing act because of all the fragility in the economy. But the more the Fed just stays in that corner because it's not sure how to come out, the worse it's going to get.
So from your perspective, March is the right month to go from a rate hike, and they just need to signal this more. They need to be able to explain this to the market so it doesn't fall out of bed, for want of a technical term.
Well, I actually thought March of 2021 was a good time to go, but later, I guess, is where we're going.
Oh, Karen, we could talk to you for so much longer, but we thank you so much. Such expertise written out in your book, Engine of Inequality, the Fed and the Future of Wealth in America, and of course, your ongoing work as managing partner with Federal Financial Analytics. Karen Petrou, we thank you so much for your time.